Hi, this is Tony Sagami. Hey, let me talk to you a little bit about some economic reports coming out of the government. I think the most interesting ones are when the Federal Reserve minutes that just came out. They said a couple things that I think are pretty disturbing for the U.S. markets. First of all, they raised their economic forecast down, revised it downward. They were looking at somewhere between a 0.5 to 1.3% drop in the U.S. economy, but now they increased that to 1.5 to 2.5%. And more importantly, they said that they thought the economic recovery could take as long as 5 or 6 years. Frankly, I think that I'm glad that they are upping that forecast to be more realistic, but I still think that's not pessimistic enough. I believe you'll be going to be looking at the U.S. almost a Japanese-style recession that could last for decades. The Congressional Budget Office just raised their unemployment estimates. They said it's going to peak over 10%. The number of unemployed Americans now is over 6.6 million. Retail sales are down. Housing prices are still stumbling. It's just hard to find reasons to be excited about the stock market other than maybe the prices of pieces of paper we call stock certificates that are going up. So I still think the right thing to do is look overseas for the growth. That's where it's going to happen. Let me give you a couple examples. We talked about retail sales were up 14% last month. But the one thing that really caught my attention was the money supply growth in the first quarter of this year was 24%. China can do that, unlike the U.S., because they can order banks to make loans. They are a command economy, and they can tell those banks, many of which are owned by the Chinese government anyway, to make loans to grease the economy and give it that jet fuel it needs to grow. And so you have a situation where you have a growing money supply, strong economy, strong consumer sales, and still growing stock prices too. So the thing to take a look at is overseas. And let me just give you a stock to consider, Yangzhou Coal. That's traded on the New York Stock Exchange, YZC. That is the largest coal company in China. And don't forget that 80% of China's electricity is produced by coal-fired utility plants. And so Yangzhou Coal is probably the most direct way to play on the Chinese economic growth. So take a look at that if you're optimistic about China as I am, and I think you'll be pretty happy with the results long term. This is Tony Sagami signing off until next week.